Tax liability is the amount of money you owe the government in taxes. It is the total amount of taxes due from a taxpayer based on their income and other factors. It is important to understand how your tax liability is determined, as well as what steps you can take to minimize it. Tax preparers can help you understand your tax liability and provide guidance on how to minimize it, but it is important to have tax preparer liability insurance to protect you in case of any errors or omissions made by the preparer. With proper financial planning and the help of a tax preparer, you can ensure that your tax liability is as low as possible. Understanding tax liability, a comprehensive guide. Tax liability is a term that often confuses individuals when it comes to their financial planning. Many people are unsure about what it means and how it can affect their finances. In this channel, we will provide a comprehensive understanding of tax liability, including what it is, how it is calculated, and what you can do to minimize it. We will also discuss the importance of tax preparer liability insurance and how it can protect you in case of any errors or omissions made by your tax preparer. Understanding tax liability is crucial for anyone who earns income. Whether you're an individual taxpayer or a business owner, knowing your tax liability can help you plan your finances better and avoid potential legal issues. It's not just about knowing how much you owe, but also understanding how your tax liability is determined and what factors can affect it. What is tax liability? Tax liability refers to the amount of tax that an individual or business owes to the government. It is the legal responsibility of every taxpayer to pay their taxes on time and in full. Failure to do so can result in penalties, fines, and even legal action. In simple terms, your tax liability is the total amount of tax you are required to pay in a given tax year. This includes federal income tax, state income tax, and other types of taxes such as self-employment tax, capital gains tax, and property tax. Your tax liability is determined by the Internal Revenue Service, IRS, based on the information you provide in your tax return. It's important to note that your tax liability is not necessarily the same as your tax bill. Your tax bill is the amount you owe after taking into account any tax payments you've already made during the year, such as withholding from your paycheck or estimated tax payments. If you've overpaid your taxes, you may receive a refund. If you've underpaid, you will owe additional tax. How is tax liability calculated? Tax liability is calculated based on various factors, including income, deductions, credits, and tax rates. The tax rates vary depending on the taxpayer's income level and filing status. The higher the income, the higher the tax rate. To calculate your tax liability, you need to determine your taxable income first. This is done by subtracting your deductions and exemptions from your total income. Once you have your taxable income, you can use the tax brackets and rates provided by the IRS to calculate your tax liability. Your taxable income is essentially your gross income minus any deductions and exemptions you're eligible for. Your gross income includes all income you've received during the year, such as wages, salaries, tips, interest, dividends, and business income. Once you've determined your taxable income, you can apply the appropriate tax rate to calculate your tax liability. The IRS uses a progressive tax system, which means that different portions of your income are taxed at different rates. These rates are determined by tax brackets, which are updated each year for inflation. Minimizing tax liability through financial planning. Proper financial planning can help you minimize your tax liability. By taking advantage of deductions, credits, and tax-advantaged accounts, you can legally reduce the amount of tax you owe. Here are some strategies to consider. Maximize your deductions. Deductions reduce your taxable income, which in turn lowers your tax liability. Some common deductions include mortgage interest, state and local taxes, and charitable contributions. Keep track of your expenses and consult with a tax professional to ensure you are taking advantage of all available deductions. Utilize tax credits. Tax credits are even more valuable than deductions as they directly reduce your tax liability. Some common tax credits include the Child Tax Credit, Earned Income Tax Credit, and Education Tax Credit. Research and determine if you qualify for any tax credits and take advantage of them. Contribute to tax-advantaged accounts. Contributing to tax-advantaged accounts such as a 401k or an individual retirement account, IRA, can help lower your tax liability. These accounts offer tax benefits, such as tax-deferred growth or tax-free withdrawals in retirement. Consult with a financial advisor to determine the best tax-advantaged accounts for your situation. Consider tax-efficient investments. Some investments are more tax-efficient than others. For example, investing in tax-exempt municipal bonds can provide tax-free income. Consult with a financial advisor to explore tax-efficient investment options. Plan your capital gains and losses. If you have investments that have gained value, consider selling investments with losses to offset the gains. This strategy, known as tax loss harvesting, can help reduce your tax liability on capital gains. The importance of tax preparer liability insurance. When it comes to filing your taxes, many individuals seek the assistance of tax preparers. While tax preparers are professionals who are knowledgeable about tax laws and regulations, mistakes can still happen. In case of any errors or omissions made by your tax preparer, it is crucial to have tax preparer liability insurance. Tax preparer liability insurance provides financial protection in case you are audited or face legal action due to mistakes made by your tax preparer. It can cover the costs of legal fees, penalties, and any additional taxes owed as a result of the errors. Having this insurance can give you peace of mind and protect your financial well-being. Conclusion. Understanding your tax liability is essential for proper financial planning. By knowing what it is and how it is calculated, you can take steps to minimize it through various strategies such as maximizing deductions, utilizing tax credits, contributing to tax-advantaged accounts, considering tax-efficient investments, and planning your capital gains and losses. Additionally, having tax preparer liability insurance can provide an extra layer of protection in case of any mistakes made by your tax preparer. By taking these steps, you can ensure that you are fulfilling your tax obligations while optimizing your financial situation. In conclusion, understanding your tax liability is not just about knowing how much you owe. It's about understanding the factors that determine your tax liability and taking proactive steps to minimize it. With proper planning and guidance, you can manage your tax liability effectively and make informed financial decisions. Remember, it's always a good idea to consult with a tax professional or financial advisor to ensure you're making the most of your tax planning strategies. Understanding your tax liability is crucial for every taxpayer. Whether you are an individual or a business owner, knowing how much you owe in taxes and how to minimize your tax burden can have a significant impact on your financial well-being. In this blog post, we will explore the key concepts and factors that determine your tax liability, as well as provide practical tips to help you navigate the complex world of taxes. Tax liability is a crucial aspect of personal finance that often confuses individuals. Understanding how taxes work and the various factors that contribute to tax liability is essential for making informed financial decisions. In this comprehensive guide, we will delve into the intricacies of tax liability, exploring different types of taxes, deductions, credits, and strategies to minimize tax burden. Whether you are a first-time taxpayer or looking to optimize your tax planning, this guide will provide you with the knowledge and tools to navigate the complex world of taxes. Tax liability is a concern for many individuals, as it can significantly impact their financial well-being. However, there are various strategies that individuals can employ to reduce their tax liability and maximize their savings. In this blog post, we will explore some effective strategies that individuals can implement to minimize their tax burden and keep more money in their pockets. Determining your tax liability. Filing status. Single. Married filing jointly. Married filing separately. Head of household. Taxable income. Earned income. Unearned income. Tax deductions and credits. Tax rates and brackets. Marginal tax rates. Tax brackets. Progressive tax system. Tax withholdings and estimated taxes. W-4 form. Payroll withholding. Quarterly estimated tax payments. Minimizing your tax liability. Tax deductions. Standard deduction. Itemized deductions. Above-the-line deductions. Tax credits. Child tax credit. Earned income tax credit. education tax credits, retirement contributions, traditional IRA, Roth IRA, 401k contributions, tax planning strategies, timing income and expenses, charitable contributions, health savings accounts, HSAs, common tax mistakes to avoid, filing late or not at all, penalties for late filing, filing extensions, math errors and typos, double-checking calculations, entering correct information, forgetting to report income, side jobs and freelance income, investment income, ignoring tax law changes, staying updated on tax laws, seeking professional advice. Conclusion: understanding your tax liability is essential for financial planning and ensuring compliance with the tax laws. By familiarizing yourself with the factors that determine your tax liability and implementing strategies to minimize it, you can make informed decisions and potentially save money. Remember to stay organized, seek professional advice when needed, and stay up to date with any changes in tax laws to avoid costly mistakes. Thank you for learning with S&D Tax Services.